Hi everyone, it's Stuart here again, and welcome to the US Open. Basically, the US stock market's about to open in about 10 minutes' time. Obviously, we've got the shutdown. So here on the calendar, the high impact events are bereft of US data. The factory orders have come out. Or will come out in 41 minutes' time. But the main news of the day, the weekly claims, from the Bureau of Labor Statistics, that's not happening, and non-farm payroll tomorrow is also not happening. It's been hit by the federal shutdown of the United States government, the most powerful country in the world, can't organise itself and keep the government open. Very, very bipartisan split down the middle of politics in many, many countries, and no more so evident than we can see in the United States. So yesterday we had record closes for the stock markets yesterday. The Dow here, I'm just going to take this up to the daily time frame. We're going to obviously trade this into the open, so we've got our highs marked and lows marked. We'll come back to this in a minute. But yesterday we were up everywhere. So this is the daily chart for the Dow. You can see 4 consecutive days higher. Nasdaq closed higher as well. Stronger day today. Dow's slipping a wee bit. And the S&P 500 first close over 6,711 we closed yesterday. The Nasdaq was up 0.42 of 1%. The Dow was up 0.01 of 1%, and the S&P 500 was up 0.34 of 1%. Gold also, conversely, as you might expect, or you might not expect, also rallying really strongly to 3,900. We've been touching this. So stocks strong. Gold also strong. We just got the daily time if you're on the go. I'm sure you're all aware of it. Big strong move here. 3,890 again. Yesterday we got to 3,895, so just shy of 3,900. So we blasted through 800 yesterday, 3,800 this week. No, it wasn't yesterday. It wasn't the day before. On Tuesday, but here you can see the Heikin Ashi candles. This is why they're so great for trend following. We've had green candles all the way to 3,700 from all the way down here from this sort of sideways action. We remember we were talking about it over the summer. The sideways action comes, up and down, but clear legs up and down, up and down. So I really like the Heikin Ashi candles. Anybody wants to understand a bit more about Heikin Ashi candles, I did a webinar a few months ago. I might do one again soon. It's a very clean, takes a lot of the noise out. It's not perfect. Nothing is perfect. But it's for trend following, it keeps you very much in line with the chart. And look at these, no wicks to the south until we got to here. On that entire run for the 11th of September, we had a one down day there on the 18th. A pivot point lower there at 3,660, and off we went again through 3,700 on the 22nd, and then a very, very strong final week of September, and we started October on the front foot as well. Big strong day yesterday, and currently a strong bid day today. So 3,900 looks like a matter of time. The buyers are still around. Obviously, the reaction could be quite severe when it comes. This is the 50-day moving average. I think the blue line, the 50-day exponential moving average all the way down there. 20 would be round about the 3,700 area. If we just go to the other layout, it's got the Bollinger Band on, so it gives you the 20-day moving average. And you see here, it's the hourly chart, not the daily chart. Daily chart, you can see the 20-day moving average is over now, the 3,700. So again, really, really well bid. And again, this particular strategy on any day would have taken next long would have been there on the 25th, and it's still long. We're still not yet into that overbought area here on the stochastic setup. But anyway, so stocks at all-time highs, gold at all-time highs. Where can we go here? Where could go wrong? Well, everything could go wrong, couldn't it? But at the moment, the trend is set. We're sat on our surfboard and we're surfing that wave, my friends. So hang on. And the other big news over the last few days as the dollar's weakened is the mighty crypto, the mighty Bitcoin has moved significantly over the last few days. See the daily scale here. Big day yesterday, and today we're off and eyeing 120,000 on Bitcoin. So the breach, as we've been saying for a long time, the key pivot area, that 112,000, I've been banging on about for ages, was breached very significantly on Tuesday. We also went over the 20-day moving average, having moved down in the second half of September, found the floor at 107, 109 range, and off we've gone. So we've had again 1, 2, 3, 4, 5, 6, 7 into our 8th consecutive day to the upside for Bitcoin, following the breach. Sorry, following the floor and then the breach of the key resistance areas. So yeah, just stay again. Another one, stay on your surfboard. And again, on this strategy, it would have gone along the next day there. Really, it would have you would have taken along at 110,660, and you would have added there, or you could have added there on the break into the upper half of the Bollinger Band. I've taken some of your profits on that first trade, but off it's gone again yesterday, and we're up again today, Thursday. So let's see how this first week of October ferries. This is not untypical, especially when it comes to the stock markets, guys. The start of a new month. It's obviously we got the benefit of the start of a new quarter as well. So the first 3 or 4, or certainly 2 or 3, 4 trading days of the new month can be quite positive. Certainly the first of the quarter as well. It's traditionally quite a strong quarter, the fourth quarter. We've got earnings coming up in a couple of weeks for the stock markets as well. So yeah, we remain bid to the upside. So the Dow is the one that moved the least yesterday, 0.09 of 1%. So, but that's the one I like to trade on a sort of a short-term basis, on an intraday basis. But we'll look at the others as well. And if anybody's got anything they want to trade, they want to have a look at, let me know, and we'll have a look at this. So we haven't got any data because of the lockdown. So we're going to try and do some demonstration of our system here. And so there. And again, if you were following me on Discord, which you should, I would say that, wouldn't I? You look at our trading strategies. I post my end of day trades. I forgot on the other night, 30. So I posted it last night. There was some couple of winners, and the Euro Oz was a big stop out. I think that's it's minus 73. That was a stop out. But these are all still open from yesterday. Sorry, from day before and from last night as well. So last night, these were the new end of day trades we took, or I took from on my trading platform yesterday. So as you can see here, long on all the US stock markets yesterday, even though we're at all-time highs. Lots of people say, well, that's, it's bound to come down from there. Yes, it is. But I know my strategy works over time. I know it's momentum-based, it's swing-based. I know it works, so I trust it. Until it stops producing profits. So I follow the rules. So we are long the 3 US stock markets from yesterday. And we are also, interestingly, long sterling cable and short dollar yen. So the weakness in the dollar persists. And also, interestingly, the Aussie yen is now is short, and we were short pound yen as well. So yen under pressure as well. So there might be a mixed number there in that yen trade. But we'll see how it all comes out, see how it all pans out. So that's where we are at the moment. So let's have a look at these short time frames. So 5 minute is my preferred time frame as we go into the open. Obviously, bit choppy here. It's a bit messy. Doesn't strike me of anything. There's the 8 o'clock. There's the UK. Sorry, the UK, the London and the Frankfurt open. The 8 o'clock. 8 o'clock. Where's it gone? It's that one, isn't it? No, it's that one there. There's the 8 o'clock from this morning. So if we just go to the hourly chart, I've marked this, but TradeLock is playing up for me, and it's not letting me have my drawings on. But basically, that's our high of late yesterday. So our high pre-market this morning was around here at 46,468, which is basically the top of the 1 hour Bollinger Band is where we are now. And the low this morning has been the bottom of the Bollinger Band. So that's the area on the hourly time frame, Bollinger Band high and low, I'm looking at. So as far as the 5 minutes concerned, it's a bit of a mess. We've got a minute to the open. We're sort of biased to the upside. This strategy would have last triggered along there, but it's been really volatile. It was short there, took you to first target at the Bollinger Band, so you'd be close off your position there, and then immediately it returned. It bounced back. So if you'd pulled your stop loss down to about halfway to the candle, you'd have been stopped out on the second trade. But as I say here, it's chopped long here. So hopefully these lines are going to see if this highlight is working. So it would have gone long there. So we've gone long there. Let me just see if I'm not sure how long these. So that was the last long, and it's gone up immediately through target 1 and to target 2. So you'd have been out strictly following the strategy there at 14.15, and now I'm waiting for another indicator. I certainly would have taken half of it off because we've gone straight to the outside of the Bollinger Band. That's what we're looking for with this strategy. It's a mean reverting strategy. So lots of volatility on open. It's directionless. I'm staying out of that, for that to cool. So we're moving lower as the cash trade starts to open. See how the spread is? Can get a bit iffy because of there's so many participants, so many sort of vagrant orders going in. See the big volatility of the US Open, they're classically designed. If we just go to the DAX, you see the DAX will have much less of an impact because it's obviously not the German Open, so tighter. That's been moving up. But the US markets, we look at the NASDAQ as well, a lot less volatile than the Dow, but again, that one went long there to there. That was target done, and now we're looking to go short, and it's gone short there. So the Nasdaq would have been short from that candle there at right on open, and we're still short. So it's hit target 1, and target 2 would be the outside the Bollinger Band. So we're out there and then out there. Obviously the spread might not got you filled, but that's now closed. If you're following this strategy strictly, you would have got out at target 1, which is the first side of the Bollinger Band, and strike 2. But because of the volatility of open, you might want to see where this lies and see if it's going to be a trend that's going to continue. What we looking to the left here, even on this 5-minute chart, you see that we've actually been trending higher during the European session and having moved higher from the Asian session. So the Asian session back here. So we've continued to add sideways Asia. Europe comes in at 7 o'clock, 6 o'clock my time. We start to move higher. Interestingly, the high this morning was the 11 o'clock candle here. The Americans, North Americans, start to come in around about here, 11, 12 o'clock, and we've taken it higher. But and again, we'd sort of long that one there, and that one would have taken you short there. Didn't get to the target, would have stopped you out because your stop loss would have been just above so that, let me show you that. So that's a short because we touched here. So we touched the outside of the Bollinger Band there, and we're looking for a cross down. There's the cross down on that one there. It did move down, but it didn't get to target. It didn't get to the midpoint of the Bollinger Band. It turned around immediately, and that's when we've gone long. So we've got out here as it's turned, and we've gone long because we're in the upper half of the Bollinger Band still. So we're with the trend. We've gone long. It's gone up, and then it's cut back there. So we've got a very minor. So it's gone from that entry there. Screw that. So it's gone in there. It's reversed, got to target 1, and then it's reversed, and we've got out and gone short at 14.25. Hope you're following that. It's a very straightforward strategy. We're looking for a cross of the K and the D line on the stochastic. Your stochastic should be set at 10, 6, and 3. And the Bollinger Bands is standard as it comes out of most trading software. 20 count back and 2 standard deviations. So this rally we've had this morning to the upside for the Nasdaq here, which is using Nasdaq as an example, is getting turned around and sold off on the actual cash open, isn't it? So as I say, we'd have been out of that and then seeing if this is going to continue to go down or indeed reverse. If we just go up to the higher time frames, we can see obviously, as we said, yes, as we just said at the beginning, it's very much an uptrend on the daily. So we come down the time frame. So the 4-hour time frame is still positive, very positive here. On the outside of the Bollinger Band, Bollinger Band's widening. We're moving higher. Stochastic's yet to cross there, so come down again. The 1 hour will still be positive as well. 1 hour has been positive all morning. Bit of a rollover here in the overbought area, but we didn't go down. We went sideways. So rollover there at 2 o'clock. The Asian, that's what I was saying. The Asian session was flat. Now we've had a strong European session, so we're still in the top half of the upper half of the Bollinger Band. We have now, though, touched the outside of the Bollinger Band there on the previous hour's candle. So what we're now waiting for, see that's touched there. What we're now waiting for is a cross of the blue to cross below the orange line, and that's happening now. However, we don't take that trade yet because this is the hour time frame. This candle is still forming and it's not completed. So, I've been caught out like this, trading like this in the past. So you wait for this candle to complete in 25 minutes and take that short if you're an hour trader. The 30-minute guy, the 30-minute trader will have already be short. I don't, as you can see, oops, too many lines. So there's the touch of the outside, the last touch of the outside of the Bollinger Band. We've gone up, it's gone down there actually. So it's crossed, so you've gone short there and it's gone down, but then we've bounced up again, we've crossed up again as it's gone out. So you could have ignored that one or taken it long or wait for the next cross down. That's what you want to be, as I say, it's a mean reverting system. So we got into the overbought area, we're looking for a down. So this one that's the 230 candle. So again, you're going to have to wait till 3 o'clock for the 30-minute to be short. The 15-minute candle would have been much more choppy. It would have been long and short. So that one was looking to go. So there's the last touch of the outside. So there's the cross. So you've gone short there, got to target 1, and it's reversed. You haven't got to target 2. It's touched the outside. So we're looking for this to cross up, but it didn't. To cross down. So it's touched the outside of the Bollinger Band again. So it's crossed long this time. So again, you could have ignored that long, but you're with the trend. So you could have taken that long position there and then got out when they've crossed again up here, because you're now looking to go short when it goes down. So you could have got in earlier there. Depends how close your stop loss was, it would have stopped you out. The last touch of the outside of the Bollinger Band was here, the 2 o'clock and the 2:15 candle. So there, that's already happened there. So the 15-minute trader on the Nasdaq using this strategy would be short from that point there. From that point there, and he's in the money. He's got to target 1. Stop loss would be around about entry now, because we've hit target 1 and then looking for to get out when we get to the outside of the Bollinger Band, if indeed we do, if this continues to move down. So 15-minute trade is short, and I can't remember where we were with the 5 minutes. I think we were long and then short. There we are. So we've hit target 1. As I say, because we're trading with the volatility, let's see what's happened. So we still got some legs in this. So you could have left this one now because it's or re-entered. I know it sounds a bit weird, but re-entered short on the completion of that candle, because we would have closed as it's hit the outside of the Bollinger Band. The Bollinger Bands have widened. That's suggesting this is quite a big move. We've had a pinch as well, which also suggests we could be a big explosive move. So when you get the Bollinger Bands moving, the top one moving down and the bottom one moving up, especially in unison like they are there on the 5 minute, that's potential of a very, very explosive move. And that's what we've seen, haven't we, over the last on the opening trades in this. Where are we? It's still only 8 minutes into the cash session, but that's a big move. And we triggered early here at 24,948. So thanks very much. The rules, as I say, would have taken us out of here and then out of there, but also I would have also this is more for a bit more sophisticated traders or risk averse traders, gone short again at 24,900. Interesting, it's right in round numbers, isn't it? 24,902. So I would have re-entered there, or not closed completely, waited for the noise of the open to cool down. So very much in the money on that one, and strolling down. So see how that's another, that's nearly completed, isn't it? Another minute and that one will complete. So we're short and successful on the Dow and the DAX there. Interestingly, across the pond, so the DAX has had a really strong day. That's 5 minute on the DAX ticking up. That's my other one I like to trade, but obviously it's not a it's not the open. We're still a couple of hours away from the close here in Europe. And the FTSE closed, another one that closed at all-time highs yesterday. Come off a bit today. You can see that. Sorry, I'm at daily time frame. So all-time highs for the FTSE yesterday, 9,004, basically where we are now, 9,440. And we've been higher again this morning, derivative-wise, 9,482, so record highs for the FTSE, the Dow, S&P, DAX. So stocks continuing to rally. So guys, as I say, if you want to trade a different asset, do let me know. But we are still short this one, aren't we? That was the Dow. No, it's gone the other way around. The Dow. Look at that volatility in that one. It was the Nasdaq that was working quite nicely. There we are. Nasdaq trading nicely. So there's that completed one where we got in extra. Now we're down again. So I'm going to be trailing my stop loss now. My stop loss will be here now. Where the Bollinger Band is, halfway through that last candle in these short-term trades. But as you can see here, the stochastic here, the way I've got the stochastic, there's still some more momentum down. If we get the stop loss too close, it could it could take us out. But just it's a great example of just not being afraid to re-enter. So that was our entry. I say technically the programmed system would have target one within there, the target two there, but manually looking at that would be happy to have entered there at that 24,900-ish level. We could see quite a bounce back to that, but that's where my stop loss is currently from the entry up there. So that was entry one, wasn't it? Our entry two was here, wasn't it? Let's put that on as well. Let's people come in and see what's he talking about. So that's our entry, our second entry. That's our first successful trade from there to there, and then we entered again there, did we, on the side? Remember what we were saying about the size of the candle on the opening trade. Remember, even if you've got a standard account, guys, this is a 5 minute time frame, so you're happy you can use that. If you're if you're trying to trade on the minute, you'd have to wait until the obviously the 32 minutes, so you could have added again there on 32 minutes, gone a little bit earlier, but 5 minutes is good enough for me, and that's certainly short on the Nasdaq. The Dow was a bit more volatile, isn't it? Interesting. The Dow has gone up before it's rolled over. An S&P, how's the S&P performing? No, the S&P so it's the Dow that's the outsider today. Nasdaq and the S&P both trailing to the downside. So there's that last short on the S&P. Got to first target, reversed. Got to first target. So you'd still be in that one unless you pulled the stop loss down. So that was the entry there. There's target one, the midpoint of the Bollinger Band. It's only a few points, point or two, but it's profit. It's reverse. So if you'd had your stop loss around the top of the Bollinger Band or top of that candle there, looks we'd still be in this. It's gone back down there, and then here it gets to target two right on entry, 1420, right ahead of open. And again, a bit like we saw with the Nasdaq, you're happy to add to that short, just go with it and trail the stop loss down, so you're locking in the profit. So that was a big move down, and it's continuing to move down here. You can see in the 2 minute time frame. If we look at my more traditional 5 minute trading time frame, similar pattern. So we've gone short there, target one, reverse and stopped out, but then we've gone short there. There we are. It's similar to what we were talking about before with the Nasdaq. Exactly the same setup on the S&P. So that would have been short there as it's gone under the 20 moving average as well. And we've got this movement. So I'm happy to keep my stop loss quite, trailing a stop loss down now. But see where may we pause? Well, look at this. Look at this on the 5-minute time. We're into a support area for the 5-minute traders. 6714 is that area. Where would we go before there? Well, let's just go up to the 15-minute time frame. We'd have got our we were marked on our highs and lows of the day, a pre-market high, a pre-market low. But you can see here we're right at a key sort of turning area here at this 6715 or 6714. So there may be some sort of sellers, so buyers around this on the short, maybe expecting a bit of a bounce from here. But remember, this is the open now. We've got the actual volumes and the cash session coming in. If we just add the volumes to the, you'll see what I'm talking about. So this makes the move more legitimate, because this is all pre-market activity. There's the European Open at 8 o'clock. See the volume tick up there, and this is the US Open. New York is open. Chicago's open. 2:30 London time, and down we go. So if this zone breaks here, where we are now, there could be a lot of fresh air. Next zone would be this area here to 6705, and that's 6700 brings in that as well. But as I was just saying, there may be some support at this level, and that's currently what we're seeing at the moment. But it's all about the time frame you're trading, the scale you're trading, and because obviously the bigger, the higher the time frame, the bigger this axis is, the longer these candles are, the bigger the target area, the bigger the stop loss, the bigger the margin you're using on your account. So it's always about trading what you see, not what you think, having a strategy, following the rules, and back testing if you have a different idea about how things work. All the strategies I share with you guys, they all work, and they all work well enough to make money. Problem is, lots of people can't apply themselves to it, can't apply themselves to their discipline, their patience, accepting you get a lot of losing trades when you're trading. People jumping in, trying to trade lots that are too big for their account, risking too much, not understanding money management, not understanding risk management. And it's not the strategy, it's not your broker, it's not the spread, it's not the slippage, it's you is the problem. Always. Yes, there'll be problems with slippage from time to time. Yes, there'll be problems with a broker from time to time. But it's you over the course of a trading career. It's you've got to beat, not everyone else, not the feed. And if you want to stay in this business for any length of time, that's the mastery you've got to overcome. So anyway, so let's go back to our Nasdaq and short, see if what's happened. We're at 5 minutes is what we were watching, weren't we? So we've pulled it down. Our stop loss is there now, isn't it? So it's finally finding. Looks like it's finding some spots. See the volumes. I'm going to take the volume off this actually. So you get the point. So yeah, moving down. So I'll say we've two successful trades, one successful trade. All right, to pull that down a bit further now. Top of that candle, sort of locking in profit, still above the Bollinger Band. See how wide. So what I was saying about the Bollinger Band. See how wide it has got. Okay, so that's the setup using this strategy. Let's have a look at the open layout. What's our other strategy? The VWAP and the Heikin Ashi with the ATR would have shown us. So there's a 1 hour chart. So this has been long. Remember, Nasdaq long all day, and this is a current hourly candle, which doesn't finish for another 10 minutes. Is a very much an out of that long position. See the spread there on the Heikin Ashi can be a bit squiffy. So so there we go. So again, it's been long, and that's your first trigger. So that would have been long. That's a nice. Oh, even here, this is a positive long position here at 13.55. And it got better actually, big candle, then it went quiet, then it went red. So it'd have been long here, short here, very weak short. So probably want to take that. That's a positive long possibly added to it on that second candle. Long. Oh, question mark about I might have closed my first position as that the body of the candle slowed down. just be watching here. Interesting, we got to 24,950, 60. It says the high of the day put in as well. And then we gone red, so we're out. We're not short yet because we got wicks to the north and the south. We got wicks to the short to the north and south. So this is confirming this last leg is over, and that's the entry. That's the entry candle. This one here, right on open, 14:30. So we get in on the completion of this candle, and we are still short here with the Heikin Ashi setup, and again, it's in the money, so just sit there basically on that 5-minute time frame. There we are. The spread looked a bit overstretched there, didn't it? And again, I'll just go back to the 2-minute time frame, guys. Remember, similar thing. That's a definite short, well, a smallish short. There's the 50 period moving average. The VWAP's dropped off for some reason. Why the VWAP? Okay, those of you who don't know what VWAP is, it's the volume weighted average price, so it is what it says. And it works out, it's set on 3 minutes. I'll have to go to 3 minutes before it launches. Wait more data to calculate. Okay, because that's because of there we are. So that's the VWAP. So just from candlestick analysis, ignore the 2 lines on there at the moment, guys. From a candlestick analysis here with Heikin Ashi, you are still short and you're happy to be short. You could have added to your position on the big bodied candle there at 14:39. It's under the 50 period moving average, and it's run to VWAP, and it hasn't hesitated at VWAP. Remember what VWAP is? What I just said. It's volume weighted average price. So this is the average price for the 3-minute session. This is only 3 minutes, remember, all day, and we've been above it, all session. Look at this. We've been above it all session. Bullish, 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 bullish. And then all of a sudden, the actual cash market opens, and what do? We turn it on its head. So we, again, if you just wanted to use this as a target area, you could have got out as it got to the VWAP, because that's the average price. Remember, it's volume weighted average price over this session. But we've crashed through it, and now we crashed even lower. So this is negative. We're under the 50 period moving average significantly, and we're also under VWAP on the 3-minute from the start of the session this morning. So this is negative. So again, people have been adding to their sell positions here on these big candles here. If you're trading this, it's what I do when I'm trading this with the Heikin Ashi candles, adding on these big body candles and strolling your stop loss. My stop loss now from an entry here would be below the VWAP. We're sort of under here now, about halfway down that candle there, that last big candle. That's where my stop loss would be on here. I'll just put that on for you. Would be here now. This is a very strong trend. It's whether there's news kicking around, the fact that there wasn't the jobs news. The government shutdown, as far as the US markets are concerned, tends to get brushed aside, because it's happened lots. 3 times in Trump's last presidency. But again, you can see some political mileage potentially in this, and start to crack down on the job cuts in the federal workforce more. But furloughed government workers is starting to happen. They're talking about at least into next week, so that's sort of being priced in to markets. Obviously, yesterday's surprise, as we saw on the on our logo for today's webinar, there's a massive miss for the ADP yesterday. The first time we've gone negative it was negative back in August, wasn't it? But it's the worst month since, really, looking back to COVID times of 2020. If we find that, let me find that screenshot I was using earlier. It's desktop downloads, wasn't it? It's this one here, wasn't it? It's a little screenshot. We looked at this yesterday, didn't we? This is negative 32, negative 33 here in August, but this took us 200 plus thousand. This is the COVID. outlier as it was. And lots of people were criticising the ADP with these sort of the level of competence of the data, but it's been positive for years, and now we starting to show negative. So certainly, jobs numbers getting hit. As we said yesterday, the impact on the U.S. economy. Many are saying that's it's all the excess has been wiped out. But what we're seeing now, this clearly, or I'm not saying clearly, is this a sign of companies actually starting to sack people rather than not hiring? They certainly have stopped hiring. This hiring slowdowns being quite clear, but some sectors are still looking for people. So and earnings in some areas are still relatively high in high demand areas. So there's this big disparity going on, and that's the thing the Fed have got to come to terms with. But certainly the stickiness of inflation, as they've always said, that's always been a problem. They've now focused back to the labour market more following the recalibration of the non-farm payroll data earlier this last month. And so therefore, ADP was a big surprise. Obviously, it's a private company. They can get it. So we haven't got the federal weekly claims, which we normally expect on a Thursday. And tomorrow's non-farm payroll is also not coming out. So again, when they do get issued, there will be, it's how they get released and when they get released is the other big impact. So should into the factory orders in 4 minutes. It's the only key US data today. See what that looks like. It's expected to tick up again. It's going to be quite a meaty one, but wasn't expecting to still be around for that. But let's hang on for that factory orders data to come out as well. In the meantime, we move down again. I'm talking for so long. So I'm happy to move my stop loss there now, I think, using this strategy here from the entry we got in here. So this would have, say, they would have taken us long roundabout there. The thing with, you see here, the thing with Heikin Ashi candles, because of the way the calculations are worked out, the sort of the buy and the ask and the bid price on the asset that you're trading it with doesn't necessarily correlate with where the candle bodies are. So you've got to be quite careful. So you can see there, it's proving me wrong now. It's right at the bottom of that candle at the moment. If we flip this quickly to, sorry, not going to do it, be able to do it quickly. And if we flip this back to normal candles on the Bollinger Band and the stochastic setup, oh, it's not doing it. This is 5 minutes. We just got the 3 minutes, so we're looking at the same thing. You can see, different coloured candles here, and that's one of the beauties of the Heikin Ashi candles. There isn't a hesitation in this move down, whereas here there's a bounce here. There was a bounce a couple of candles ago, but we're still moving down, aren't we? So same strategy. Now then, this one, interestingly, is looking to go long. So that would have actually gone long. You see there, because the blue's crossed above on that one there, you would have probably got fill. Yeah, that isn't crossed enough. So you would have, yeah. So that's looks like that's a losing trade because you'd have gone long here, but immediately we've gone down again. Oh, this is still moving up, so there may be some floor in it. So if you're trading this on the 3 minute, you'd have jumped in a bit too early and been stopped out on that one. It should have closed out, but we're still coming inside the Bollinger Band, which is interesting. So the 5 minute trade, which is what we were trading this on, weren't we? So there does seem to be a bit of a pause, doesn't there? We've had two candles now. The lowest we've got was 23,800. So there we go. I say this all the time, don't we? So the big round numbers come into play. 24,800 has been tested a little over 5 minutes ago, and that was enough for some people, some traders sort of taking off their opening trades. So, the guys that are trading the first 30 minutes of the US opening session, or half an hour into it, they've closed for the day probably, or closed certainly for that session very profitably if you've been short, like we have been. So thanks very much. And that's now also, so the 5 minute, like the 3 minute did a minute ago, we just looked at, the 5 minutes is now looking to go long. We want to see a cross of these two. let's just leave it here and for the. But again, it's the completion of the hour, all that sort of juxtaposition. So as this we roll over to 1500 hours, we obviously got the close of the hourly candle, got the close of the 15-minute candle, 30-minute candle, all the short time frame candles as well. So that certainly was enough to close out our last short here. Remember, we were short from up here to there, we're down, and that would have been enough. It's probably possibly on that candle, to be honest. The fact that one engulfed that one to get us out. If we'd pulled the stop loss down too close, we might have been stopped out on that one there. But certainly, I'm out now of that second short. We've lost the detail because TradeLog is not hanging on to all my lines on my system, which is a bit of a pain in the butt. But now, this is now long. Okay, this strategy here is now bought at 24,844. So from all those shorts, successful shorts, let's see how the longs play out. So this strategy would have gone long there. As we saw in the 3-minute, it didn't work out. See if the 5-minute works out. So that's gone long there. We've had that first cross. Is it going to hold? We'll see. Time will tell. Our stop loss would be down around here. We've obviously had that volatility of those tails, but I think my stop loss there. This one doesn't look as around about. Oops. So stop loss there, and then see where we go. Stop loss would be there. God, I'm trying to demonstrate this manually. So that's my stop loss. That's risk. How big is that? You work it out. That wants to be. If this gets hit, I don't want to be losing more than a few percent of my account or my account for the day, obviously my trading account for the scalping account, all that. And let's see how it runs. See if the trade runs. I'm not going to set a target. Target potentially could be all the way back there to the midline of the Bollinger. That's what the strategy says. That is the midline of the Bollinger Bands, the 20-period moving average, so 24,914. I'm not going to put it in formally, but so if that did play out, you can see from a risk-reward point of view. Let's just put that in for good measure. That's what the approach tells you to do. So that's our target area. Let's make that a blue line. That's our target. Blue for target there. Green for go, and I'll make that red for the stop loss. Shall we just for completion? So there we are. There's our stop loss. There's our target area. See, the risk reward is pretty good, but obviously that's quite a long way to give back. But let's see what happens. The pressure, you can argue, perhaps to the downside. And so now we go back to the lower fine. What's the other time frame show as well? The minute has found that. Yeah, there's our minute time frame as our entry. Our stop loss is around the low of the day, and our target is all the way up there on the minute time frame. It's already scummed. The minute has a resistance there at 24,864. The 2-minute has a resistance. Interesting. 2 minutes, which it's got all the way up there. Interestingly, so the 2-minute has an initial target there, and they would have gone long much earlier and then got stopped out like the 3-minute, like we saw with the 3-minute positions we were looking at a minute ago. So 5 minutes is the one we've traded on. We got in, and we're sort of out of the money at the moment. But see if we can come back up there. It looks a bit of a stretch, doesn't it, at the moment? So see what happens on the upside, because as I say, there's no particular data. Oh, the factory orders should have come across the screens now as well. Let me just refresh this. For today, and why haven't the factory orders updated? Or perhaps they're not. Or perhaps they're still. They were part of that because the others had taken off the calendar. So let's that's not coming out either. So contrary to what the guys on Bloomberg were telling me earlier, that this calendar was still going to be relevant. Let's go back to factory orders have not been issued. They're still on there. Challenger job cuts obviously would have gained more significance this morning, much better than expected, 54,000. Minus 25% is the pressure on the dollar. So yeah, factory orders have been moved. It's saying durable goods orders, factory orders, still saying it's in there, but it hasn't come through. It's just been delayed because of the, which would make sense, wouldn't it? Delayed because of the shutdown pending homes. That was yesterday, wasn't it? Earlier in the week, I should say. There we go. Anyway, it's obviously not coming out. So there we are. We're at sort of in the money now a little bit. See how that runs up. Might pull the stop loss up a bit. Not too much. There we are. So we're running, we're retracing. There we are. Unable to store your chart data. Yes, I know. Trade locker. Do my head in, my friends. And again, let's just flip back to our other setup. I have lots and lots of strategies, guys. Lots of different setups. These are the only two I've got on at the moment because I keep it's deleted all my setups. So there we go. So this is the our Heikin Ashi rules. So short from here and out there. So we'd have got out here at 24,480. Simple on from the red to the green. I would have had, to be honest, I would have added short again there at 15.50, and then but it's gone green, but 5 minutes later. So it's 2 minutes. That's why. Sorry, 5 minutes. Keep things in order. There we are. So big move down. That's the first. Strong, very strong as well. Not so strong. See how the body of the candle has shrunk quite significantly from the three previous. So I'll be questioning out. I'd have probably stayed in at this candle, even though it's a doji candle, rejecting. Remember what doji shows? Rejecting that 24,800, but unconfirmed on out on the green candle complete. So this would have been, I would have been out here at 15:05. So again, half an hour. Lots of pips, lots of points on offer there from the Nasdaq. Thanks very much, and off we go for the rest of the day. This is now looking potentially to go long, but the oh dear me, the our VWAP has dropped off again. Oh, because it was 3 minutes. That's why it's which there we are. So we got so potential. It's still not right to go long because. I mean, some people do with they just literally flip from red to green. So short here, out there on the green, and go long on this candle. But because it's got wicks to the south, you want a candle with no wicks to the south if you're going to take this long. Obviously, the target now to the up area could be the VWAP area at 24,871. So just remember that. We flip back to our other layout. Go back to our stocks layout. 24,781, wasn't it? We've moved up. We've lost all our lines on here as well, but we remember we got in on the cross of the here, so we're still in the money a bit. But 24,872, that could be our first. Could have used the VWAP as our target, and you see that it sort of corresponded with the bottom of where the bottom of the Bollinger Band was there at 868. So we could have got in there. So it's ran to that first target zone there, if you like. It's finding resistance at this pivot turning point here. See that? So we need to break through that if we're going to get to the midpoint of the Bollinger Band. Okay. I don't know how many of you here today. There's nobody talking to me, but such is life. The lone trader. And I've got our video to do, so I'm going to wrap this up now. It's 5 past the hour. Thank you. I'm going to go through these. I'll update all these later, but these are the trades from last night. I'll be maybe some more trades tonight. We shall see. So Nasdaq is weaker on open. Although they're all still above. I'm just looking at the cash market here, not the derivative market. Still above, still just about in the green. The three major U.S. markets. The Dow's up 25 points, Nasdaq up 78 points, and the S&P's up 5 points, 6716. The S&P and the Nasdaq were better performance today, weren't we? There we go. And the Dow was a very choppy one to have traded that one today on open. Want to stay clear of immediately to the upside. That's gone a short there. Well, to be fair to it, that's gone short there as well at 55, 14.55. So that's short. Target one still short. Stop loss now at the Bollinger Band. So that's been actually a last sort of Dow's playing party there. So there's the cross. That would have gone long. That's the one we put in earlier, wasn't it? That's the long. Well, in fact, it isn't it? Because we've touched short. It hasn't touched there. So no, we were waiting for a short. We waited all that time. So it rallied up, and interestingly here, we caught the top. So we'd have gone short here on the Dow. Or we would have should have gone there on that one there. Because that was see, we've touched the outside of the Bollinger Band here for the first time, having crossed to the upside, but we hadn't. No, that wouldn't have played out, would it? The last touch was here, and it went down, and then so the Bollinger Band last touched the outside there, and now we're looking to go short, even though we've got cross. So we've ran up, and we're waiting to go short for this to cross. So we've missed that move up, but we've got that move down. There we go. So we missed the move up, and all the volatility have opened here quite nicely, and that's short. There's target one there at the Bollinger Band, and target two is control the it is down there. Hang on a minute, what happened there? Different. Target two is down there, isn't it? This is reversed. So the market's reacting differently. There's the Nasdaq was up here, and we're now sort of out of the money. Looks like that move might have failed to the upside, but we're still in the money in our stop losses. So down here, so see how that fans out. So guys, I will see you tomorrow. Obviously, with the lack of non-farm payroll, we'll probably do a similar thing tomorrow. The opening trades of the US market. See if we can be as successful as we were today, and then a weekly wrap because it's been obviously it's the we've had the end of the month, we've had the start of the new month. The PMIs, manufacturing PMIs, were pretty dire, but stock markets have shrugged off. The government shutdown in the United States, we've hit all-time highs. Gold continues to rally, and Bitcoin's having a right old good week as well. So some good things for the trend followers this week. So take care, everyone. I'll see you again tomorrow. Be good, be safe, and may the pips, as ever, be always with you. All the best, everyone.